Officially, good morning. Welcome out to the Market Watch Group Weekly Market Prep. My name is Scott. I will be your host. The stream is on. Keep that in mind, everyone. If you ever have a hard time where you can't connect or you just can't get Discord to work, there is a backup option running. All you got to do is go to YouTube, find our channel. I would assume you're already subscribed to it because, of course, you would be, but it would tell you that there is a live event in progress and you could watch it that way. So, just as a fail-safe, let's dive in. We've got a lot to talk about. Is this the week that we see some stability? We saw some good things happen. Real nasty first day, then the rest of the week we started to come back. Remember, as always, we're not brokers. We're not advisors. We don't give advice. We don't give recommendations. This is for education and illustrative purposes only. We're just traders working together here. What are we going to do today? Market posture. First and foremost, we are going to score this thing. We're going to talk about what's good, what's still concerning, what's improving. Let's make sure that we have a real good sense of underlying conditions. When we have that, everything else is easier, right? If you're not constantly like, should I, shouldn't I, should I, shouldn't I? We know what we're looking for, or at least we should. It shouldn't be, let's just watch and then hope something catches our eye and then we react to that. It should be, this is what it's going to take for me to do A. This is what it would take for me to do B. This is what it would take for me to do C, right? I say it all the time. If you want to be right, have more than one idea of what might happen. Let's give ourselves some ability to adapt. And certainly I hope that's what we've done, right? There's making adjustments to risk every step of the way. One of the concepts we mentioned recently comes from if you haven't downloaded it, go find it in our downloads, the top 10 trading mistakes. That's such a great read. I call it a head nodder because you read it and you're like, yeah, I've done that. I'm doing that right now. It's a great way for you to pinpoint maybe the top 2 things that you're doing at any given time that you want to address. We just finished this last week with section 8 of our trading plan, which means we're starting fresh this week. For everybody who's just getting started with us, this is a great time. Those of you who are seasoned veterans, maybe you want to join us for just a full round of some of those who have been, some of the subscribers who have been longer are now in what I would call a prioritization phase in their trading plan development. When you first start working on your trading plan, you go through 3 distinct phases, right? Define is the first one. That's when you're first getting everything written down. You're touching every section that needs to be touched. Once you've gone through it once, and then you're trading on that, the second time you move into refine. So define, now it's all on paper. Now we're like, okay, what's good? What needs more? What was not quite good enough? And we start to refine the plan. Then the third stage, now some people get impatient and leave. I think you should do this stage, would be the polish stage. Polish. You're really refining, like the devil's in the details. The polish is that last little buff that's like, oh, look how shiny. Then, once we have that, we're not like, oh, look how great we are with our shiny trading plans. No, we're never satisfied because that is a constant process of improvement, one of many that we focus on. So then we would go through and we would do an evaluation. We would score each section. There's actually a video on this. I need to find it and mark it. Maybe we'll do it again, actually, in one of our working sessions coming up soon. But you would score each section of your trading plan, 1 to 10, right? How strong is it? And once you're done with that, it's pretty easy to see which are the 2 sections at any given time that need the most work to get brought. And then it's just a constant leapfrog. Whatever's at the bottom, you work to move it up. And then something new is at the bottom and you work to move. And you're just constantly like, how do I make this thing better? Constant improvement. So some people are in that stage where they're like, yeah, I'm only working on these 2 sections. I would like, since we've got a nice big group of new people, I would like to invite everybody to start this week, section 1. Let's just do it. Let's do it all together. Let's make a concerted effort. Let's get some interaction going on each section each week. I'm going to talk to Glenn and make sure that he's bringing it up each week. And we're going to make this that's a 2-month push, just so you know. That's 2 months, 8 sections, 8 weeks. If you've never done it before, you will be amazed at what kind of a trading plan you have on the other side of this 2-month process. So late summer trading plan push. That's what we're doing. We're going to look at the economic calendar. We're going to see. I don't think it's time to search yet. Maybe. But one of the things we've been doing as the market has gone into this correction that we're in is we've been cleaning up the watch list, right? We've been dropping things from the watch list that are, we're saying, you know what? It got hit too much. No, I don't want that. And then as things restabilize, that's when we'll go through and we'll reestablish searches for every sector, right? Every sector we'll go through and we'll reestablish what our watch list will be. Who are the leaders now as we reemerge, making sure we're always finding the money. Okay, perfect. I swear I've changed this so many times and it still says shopping list. And trading plan section of the week. Section 1. That's where we're going. Let's dive in. We're going straight to the posture. Today is August 11th. I love feedback. I love interaction. Make sure you are talking to me, saying hello, etc. Good morning, Michael. Good to see you. Okay. Let's get started. Where are my charts? Oh. Is it still working? Let's make sure. Performance detect. Yeah, no, we're good. Okay. So we talked about that. We even talked about this on like Monday of last week when it had a real nasty start of the week, right? And I said we actually came in and we looked at the candle, and I said this is a live candle. For all we know, at the end of the week, we might be right back where we started. I even said, let me pull up my drawing. I said, what if it goes all the way up back into the prior trend? It didn't do that, but it got closer than I think any of us maybe thought, right? A little bit further, and it would have been in there. Oh, chart video turned off. I see it too. Hold on 1 second. Yeah, I don't know why that happened, but let me get that reestablished here. That was strange. Okay. Yeah, no, if you ever lose it, if you ever don't hear sound or don't see video, I would always just ping it in. Because what that does is that allows me to quickly ask everyone else. And if everyone's like, no, I see it fine, then you know it's on your end and you have to figure it out. But if everyone else is like, I don't see it either, then I know it's on my end and I have to figure it out. So yeah, best course of action is just bring it up and we'll all address it. So Michael said he restarted his computer. I'm sorry. No, that was definitely on my end. I have no idea what happened. I think when I used that drawing tool, it like somehow clicked off. I'm not sure what happened there. I do need that drawing tool though, so I'm going to open it back up. That was good. That was good. Okay, there it is. And So how do we score this? Last week we, nope, that's the wrong spreadsheet. We took a quarter of a point away, right? Right, from here to here, we took a quarter of a point away because it broke below this. And you'll notice that even though we got down here, we're actually ended up at exactly the same place. In fact, even a little higher. A little higher. So if you look here, oh man, everything is all of a sudden running slow. Sorry. The low was the close was 532.90, and then this time 532.99. So we're literally at the exact same place. I'm gonna leave my score the same. And in fact, as I look at this, I think maybe this becomes my new line, depending on where this comes. If this were our new long-term trend line, yeah, that's quite a bit slower. That would look more like this one. That was basically a 1. Well, we'll see what happens. But for now, nothing's changed. I'm going to leave it at 1.25. That was a great recovery week. Exactly. Yeah. Well, and actually, Bob, it's funny because I'm gonna say it because I predicted probably 2 or 3 things. Right? But I said, hey, we're probably going to see a recovery. But it could also do this, or it could also do this. But yeah, and I think at least some of you traded bullishly. Yes? But what's the difference trading bullishly when our market is a 2.25 and our market is a 5 or a 6 time frame? Time frame. Very few. That's another difference, Bob. That's another difference, right? Less trades, shorter trades. Great. You're still trading. And if you traded bullishly, still profiting. But you didn't expose yourself to risk, right? And so that's the adjustment. If you got in something on Tuesday like, hey, it's starting to recover, there's a good chance you locked it all down by Friday, or at least locked down some of the profits, tightened your stop, and carried some through. Right? Okay. Yeah, I'm going to leave my score the same here as far as that goes. Let's drop this down to a 6-month daily. Let me know, those of you who are new, especially if you're starting to get the hang of this, or if you're like, I wasn't sure. We all want to help. So yeah, I know that it's a difficult scoring process sometimes, right now especially, because you have to kind of be thinking this process needs to orient more bullishly than bearishly, so I don't overreact. If I just came in and I'm like, hey, if you're drawing a short-term channel, this should be a -2. That's not how it works. It has to really find its way to that point through time. So like right now, we're making adjustments 1/4 point at a time because we don't want to overreact in a consolidation, in a correction. I don't want my short-term score to end up bearish until the whole market gets bearish, if that makes sense. So, different trades, Michael. Yes. Different exactly? We stopped trading technology. We stopped trading, comm services maybe came back in, but chips and all these things. And yeah. I love it. Love it. So, what is my score? I'm actually going to leave this one the same as well. Because on last week, when we scored this right here, we scored this a lower low. And we said, that's a lower low. I'm going to take 1/4 point. Okay? When we took this out, right? When we took that out, we dropped it. Further still. Now, we've been dropping it the whole time. That's important to note. Is we have dropped from a 1.75. We lost 1/4 point, then 1/2 point, then another 1/2 point. So the question is, having dropped it 1/2 point, did this do more? And the answer for me is is no. This is the same lower low. We scored it there because we saw it early, but if we didn't see it, let's say that this first red candle was Thursday and then the next one was Friday. Would we have scored minus 0.25 for the red one and then another minus 0.25 for the white one? No, we would have said that's a lower low. The whole move was a quarter point. So the fact that we scored it early. Now, am I gonna give the buyers credit for anything for this move? Nope. It was decent at best. It got back very close to the old lows. But it was enough that I do think a sneaky reversal could happen. That if we have a little bit of a consolidation, we still could go a little higher still into next week, a day or two. But I do think based on what we're seeing from the volume profile, I'm not scoring it yet, but just what I see from the volume profile is diminishing volume, meaning that the buyers are weakening, right? There's less and less of them. So that's a price volume divergence. Price is moving higher, volume's moving lower. It's not going to move that way much longer, right? And so, yeah, we are expecting a consolidation of some kind, and that consolidation allows us to evaluate the sellers. They were pretty bad here. They were even worse here. Look how fast and big it was. So the question is, if we get this, now what do they do? Because if they have one of these little drops, sneaky reversal. Sneaky reversal. Why sneaky? Because we technically, well, although I'll tell you what, some people might say, hey, you know what? It broke. That's enough. It broke the line. Great. And we don't know if it's done yet. So maybe it's not a sneaky. Maybe it's just a standard reversal, really. So, covered calls. You could have gotten some premium for a minute there, Michael, but it definitely regressed. The volume or the volatility was insane last week. It was like the most epic representation of pearl clutching I've ever seen from the market. Oh, I just saw on my phone the women held off the French 67-66 in the gold medal game. What an epic game. Well done, women. That brings the U.S. tied with China, 40 medals to 40 medals. I think that might be it. I don't know if anyone of those countries has anybody else left. Although, Australia, Sandy, most medals, most golds per capita. Like the Australians per capita are dominant. Okay. Back to the market posture. What's the score? I'm unchanged. If the buyers can get a higher high, a higher low, something like that, then I'll start getting credit again. But for now, I'm glad to see that it stabilized. The trend drop, we dropped from 2.75 to 1.75 over the course, right? So that's a good chunk of our trend strength that pulled back. Volume. Let's go see if volume stabilized, if volume got better or worse. I think volume is going to stay the same for one more week before it starts organically changing. Remember, we do 1 month daily, and we're looking for smokestacks above average, and my average is a 20-day simple moving average. 20-day simple applied to volume. Okay, and I'm looking for anything, and it's got to be 5%. 5%. Why is that important? Because this day here doesn't qualify. If you notice, the average volume is 62.6. We got 63.2. So we really only got, we need it to be like 3 million higher. It needs to be at least 65. It wasn't. It was 63. This one counted. We have 62. It got to 70. That's more than 10%. So that's the threshold, 5%. So all of these qualify except the last one. Okay? So these are the ones that we're going to score. What do these days represent? Conviction. Actually, I think we actually have two more. Let me see. I have this one here. I'm going to discount it because technically I don't know which way it came from, and it's at the very edge of the chart. So this is all I'm going to score. This is anything that's back here, I would just sort of be like, nah, we don't need to do it. It's discounted. I've got, now the way that I did these is I bundled this group of three, and I said, I'm going to give you credit for two because they just weren't, even though they were all above average volume, the sum of the three, I've seen bigger days than those three put together. So I think two, maybe even a little generous. Then I'm going to give an X here, an X here, and a check here. So just like that. Now, the thing about it is next week, some of this is going to start to drop off and become stale. Stale meaning it's at the edge of the chart. So even if it's still there, I'm like, I don't know. Okay, we have a buying day, then another selling day, then another selling day, then another selling day. This has been one of our points of contention, this candle right here, because it's a white candle, a buying candle, we think. But remember, white and red is only representative of intraday, whereas up or down is marked day to day. When I say it's down X%, I don't say it's down from the open. I mean it's down from where it closed yesterday. Does that make sense? And so we know that the day before it closed here and the next day it closed here, so it dropped this much. It recovered this much during the day, but overall still dropped significantly. It started down 4%. It ended down 3%. What's the takeaway? It ended down 3%. So sellers get the day. The next day, a buying day. Ooh, here's another one. Who do we give this one to? I'm actually going to give this a tie. Right? Because it actually gapped up. So a lot of that volume was the initial buying pressure, went up a little, dropped. And it basically, dropped to the same place as the starting point of the prior day. So I'm not going to score it for the sellers because they really didn't take control of it. They just reversed what happened before. So I'm going to leave it like that. I'm going to say that's a wash. It looked bad because it started so high, but I'm going to say a wash. Now you'll notice the difference between these two is it really probably only dropped like 0.3%, whereas the other one dropped, right? Does that make sense? I hope this one's a little more subtle. Sometimes it's a little bit more of a difficult read. So what do I end up with? I end up with 1, 2, 3, 4, 5, 6, 7. 7 to 3. Oh. I think last time we were 7-2, right? 7-3. So it got just a little better. We went from a 7-2 to a 7-3. I am gonna raise it 1/4 of a point. Keep in mind, all I'm doing is saying it's less negative, but it's still negative. Right? So 7-3 is a negative 0.5. If it's 7-5 or 5-3 or 3-2, still slightly in favor of the sellers, that'll go to 1/4 of a point. If it's a tie, if it's only 1 point off, I'll actually give it a 0. And if it's a tie, when the buyers and the sellers tied, I give it to the buyers. Volume is a little bit more subtle, but remember it's only 1 point. But yeah, I'm going to take this to be a minus 0.5. And just like that, we have a slight improvement. Questions? Michael says he wouldn't change his, leaving it minus. Okay. Perfect. Leaving it down. Anyone else want to weigh in? What are you doing with yours? Let me know if you want to. Up a quarter. All right. So a little bit of back and forth on that one. Good, good. Love to see it. Let's go look at our major market analysis. Those of you who are new, if you have a question about it, feel free to ping it in. Okay, what are we doing here? So we now have another set of corrective action. And as we start to come out of it, you can see that even with the correction, the NASDAQ is still on top. Too new on this one, PJ. I get it. You're just kind of getting acclimated. That makes sense. The NASDAQ on top, what does that mean? It means that there's more appetite for risk. People want their money in tech, which is going to grow more quickly, or at least can, than they do in the Dow, which is going to be more stable. Right? That's what we're doing here. This is an appetite for risk. I don't know what's going on with my chart, you guys. That's not me. I'm not doing that. Let's get rid of this. Let's make sure this. Okay, so the tone is we're wondering if we're through the correction, but the technology is still holding its place at the head of the table. Now what? Now we have S&P and NASDAQ followed by the Russell, and who's at the bottom? The Dow still. So this setup is still bullish. What it's telling me is that when we went through this corrective action, it was broad-based and everything corrected in a similar fashion. We didn't see a defensive shift and defensive posture. If this was going to be worse than this, then we would start to think, oh, I'm going to expect to see the Dow move into a leading position. I don't see that happening. So I don't expect this to be worse. That actually is helping to confirm that we're coming out of this postured in a bullish way. Remember that our score here is actually a pretty positive score. 0.75. So it needs to hold up. Let's go down to 66. This is where there may be some concern. And you can see on this one, we did see the Dow move a little bit ahead of the Russell. So, still NASDAQ on top. Yeah, I don't know. Just the fact that the Russell got hit so much on our scoring time frame, I'm dropping it 1/4 of a point. So what I gained from volume, I'm losing from major market. And I was, to be fair, suspect that this would be able to hold up. It was at a 1. It was very strong. But when we saw the small cap starting to get hit, that changed a lot of things. What do I make of it when all indexes drop simultaneously, broad-based? It's not that there was no indication that people are posturing for it to be defensive coming out the other side. Everything sold off, and then as confidence resumes, I would expect everything to resume their bullishness. If it sold off in a pattern that had more of a defensive indication, then I'd be more concerned, press, if that makes sense. Let's go do sectors. Now, sectors could actually potentially... Oh, no, sorry. Let's do 22 days. If you were uncertain, this is your tiebreaker. This is your tiebreaker if you were uncertain. This supports our decision. Yeah? On the 22 days, what do we see? Everything else sold off. The Dow did hold up more. It didn't impact as enough to reflect on our scoring time frame. But if you were like, I'm not sure if I made the right decision to reduce it 1/4 of a point, I would say this is validation. No? For me, it is. For me, this validates that I took that 1/4 of a point away. All right, let's go do the same thing with sectors. Let's figure out what we know with sectors. Okay. Boom. Who's leading? Financials, interestingly. Yes, press, that's exactly right. Dow is considered a run to safety, 100%. That last 22 days is where we're like, ooh, if this continues, then we would see it reflect on our score. But if technology resumes its leadership position, then that won't happen. And then we will have been right not to, right? So it's like, it's this organic, ongoing thing. Okay. So here's what's interesting now. On our 200-day, financials is leading and utilities is second. Then we have comm services and industrials. So if you look at the top four, 3 out of the 4 are growth. And then if you look at this one here, there's technology. Then we have materials, staples, healthcare. Those are a little more defensive. Discretionary. Ooh, discretionary started to want to do something and it's back down. And then we have energy down here. So I like how financials, even though financials has been hit, it still seems poised. Let's go to 133 days. Yeah, we don't love that. That's very defensive, right? That's very much a run to safety. Like, oh, what do we need? We need to heat our houses and light them, so we'll buy utilities. Oh, I hate trading utilities. But it's there. You can see it. We can't argue with that. On this one, this isn't where we score. This is just a, acknowledgement. Down here, we have technology and discretionary. That's not, this doesn't look great at all, right? Okay. Everything else is in the middle. Now we move to scoring. Before we go to scoring, this is where we were. Barely holding on to bullish last time. Barely holding on to bullish. And I think you can see how we got to that point. The question is it going to stay that way? The trend has been still to decline. Let's go see. 66 days. Ooh, I think we've lost another 1/4 of a point. Utilities up in the top, followed by healthcare, followed by staples. That's not great. That's not great. That's definitely taking a 1/4 of a point away. Now, again, this is just the first time. Are we like, oh, the sky is falling? No. We know that this is a slow process. This could easily turn back around and we could easily see growth sectors shoot back up. You're already starting to see it down here, and we'll see it move in. Bob has an interesting perspective. He says it may not be due to defensiveness. It could be just due to AI using a lot more electricity and that our electricity demand is increasing. That's an interesting thought. Yeah. Okay, let's drop down to 22 days. Boop. And there it is again. You can see utilities at the top. You can see staples there. And you can see that our growth stuff is down below. Right? It's down below. So, yeah. But momentum can easily shift. So I am going to take away that 1/4 of a point and move this back down to 0 now. Okay. So does that mean that we are going to have a lower score? It's definitely stabilizing, right? I want you to look at what's happened. We dropped from 575 to 5. We dropped here to here 3/4. Then from here to here, we dropped a 1 1/4. From here to here, 1 1/2, accelerating. And then all of a sudden now, maybe 1/4, maybe not at all. Climate change, that's true. A lot of heat, a lot of air conditioners running more frequently. That's a good point. That's a good point. Let's pop into the VIX. Wrap this up, and then we'll go look at our watch list. Talk about. Let me get this back to 6 months daily. Let's go VIX. Okay. So, same thing. This was Friday. This was Monday. On that Friday, that higher high caused us to raise our score or lower our score by 1/4 of a point. Yeah. So I think we already scored what happened. So I'm going to leave mine alone. I'm not going to raise it. I'm not going to lower it. This is our last low. We already, what we scored here, nothing changed. And I'm glad I didn't, because you'll notice that where we were at this point, we're lower than that at this point. We're actually lower than on Friday when we scored it. We're lower than that point now. But we haven't made a lower low. We haven't made a lower high. This was interesting, but it didn't actually trigger anything. And so, yeah, I'm going to, it definitely is downward momentum, right? Here's the thing, you guys, is that we may see, let's say it stabilizes. It doesn't, let's say it hardly goes up at all on Monday. And then on Tuesday, it starts to drop like that. Doji followed by back candle. That would make this technically a higher low. But if we went up for a day or two and then we stabilized and came back down, that also, those two would cancel each other out. But I got to tell you, a lower high coming off of one of these, you don't see it greatly, but that's one right there. Those are great times to trade. As far as scoring this goes, I'm going to leave my score the same. I mean, we're coming out of it was choppy. But I'll tell you what, if I get a lower low, if I get a higher low followed by a lower high, I am actually going to still score it I'm going to say that's more in favor of the buyers than not, and I'm going to score it positively next week. If this is what it looks like, next week I will score this positively. But yeah, I mean, we're not trying to anticipate what we want the market to be. We're trying to score what we see. What do I see? I don't see anything scorable, but I do see things setting up that are lucrative and things that I want to be paying attention to. So yeah, let's leave the score the same. I'm going to leave mine the same. Let me know what you're doing with it. 0.25, leave it alone. Score drops 1/4 of a point. So I'm going to say this is our first week of stabilization. And we're stabilizing in still a slightly bullish overall posture. If I'm between like -1, -1.5 to +1, +1.5, that's neutral. That's where I'm in a neutral range. I'll look for a lot more balance. But the fact that we stabilized here, we're at a corrective point. We're on the cusp of an accommodative Fed. Let's go look at a few other things now. Let's just kind of look around and then we'll get to our watch list. Yeah. So let me get to Fed watch. You should be over here. Let's go through the last 3 meetings. We're already okay, 5 weeks and change. 5 weeks till the next meeting. And again, what this 50-50 picture you're seeing here is not 50-50. Do we stay the same or do we cut? This is 50-50. Do we cut a 1/4 or do we cut a half? If you look at this probability, it's a 100% probability of an ease. The question is by how much, right? And it just continues from there. When we go to November, 100% ease by how much? So this is, are we down a half? This is down 0.5. This is down 0.75. This is down 1%. That's the probabilities for November. Then we go to December, and this is 0.75. This is -1, -1.25. And there is a small fraction of percentage of lunatics who think the Fed might do a half a point by a half a point by a half a point. Okay. I'm going to do a quick poll. B, C, D. End of year. Where are we? And I'm going to put myself with an asterisk right here. End of year. Where are we? A, B, C, D. Bob and PJ both think that we're going to get at least one half. We'll get 2 quarters and 1 half. Sandy says the same. Graylin's with me. 0.25, 0.25, 0.25. That's the total amount, Press. The total of 3 cuts. We're in December. So, Press, you're not on here. You think that even though the market thinks at least 0.75, only a half. There you go. Press and Greg are going to be they're going to say that the market is overpricing it in. Okay. I think the Fed got spooked on that last jobs report. So I'm actually going to go for A. I think we're going to see 3 in a row. Bing, bing, bing. 1, 2, 3. Clint agrees. There's Swissy. Housing is a problem, and right, that's going to make it less of a problem. Housing becomes kind of a cyclical inflation problem. Unfortunately, that's one of the reasons they have to be mindful of it. That's a good call out, PJ. Okay, interesting. I love it. That was a good poll. That was a good poll. The market always tends towards, hopeful crack. Housing is a big issue in the election. I thought the election was going to be an issue in that it might curb their enthusiasm to ease Trump's all but like, if you cut it and I get elected, I'm going to fire you. That's basically what he said, right? So let's go look at our watch list and see how things look. I got to get my pen handy. And let me get ready to go. We'll get you here. All right. So, none of these things are, we just saw the market stabilize, and you have 5 days of up here. A lot of times when I'm working with people, they're like, oh, they're enticed by these 5 candles. They don't see the fact that it's like there's one other time it moved, maybe a little more than this, and then it stopped, right? And it's like there's no reward to risk ratio here for us. If you're trying to get in bullishly now, you are definitely chasing this move. You are late. You got to ask yourself, why didn't I come in here? What about this made me more willing now? At this point, I'm managing trades and thinking this thing's going to run out of steam and then give me some kind of a pullback. Yeah? Buffett sold half his position. The thing is he's probably been doing it for months. And I mean, he probably started selling back in here and left a lot of money on the table when it did this. And I think Buffett doesn't understand AI, so he's not going to do much with it. The same thing happened. If you go back and look at Buffett's record around the .com, he's like, I'm not buying any of the. He underperformed a lot of things because he's like, I don't understand it, so I don't invest in it. And then when things crashed and he didn't, he's like, yeah, what's up now, fools? So, yeah, I mean, I'm never that convinced of Buffett's read on technology. Yeah, technology lags investing fundamentals, and that's what he tends to rely on, if that makes sense. Amazon. I don't know. I mean, I think it's enough. I think it's enough that even with it under the 200, if it does something like this, I'm going to give it a shot. I'm all about jumping back in when institutions start piling back in. Institutions who missed being able to get Amazon here are going to like the price down here, right? That's a nice little bump for them. AXP. Maybe. I think there's better in financials. Financials is interesting because you've seen that financials held up. When a lot of things got beat up, financials held up. Bank of America. It got beat up, but is it gonna sneaky reverse out of this? Same thing with some of these. If I see higher lows this week, I'm gonna go with the market. A lot? No. But I'm gonna go with the market. Caterpillar, same thing. Same thing. Ooh, Colgate. I think Colgate may give us something this week. That's a nice looking trend. That's definitely on the list. None of these have started setting up yet. Look at Chipotle. Man, I did not trade into this. I know some of you did, and I love that you did. You know I was watching this, and I just didn't. It was such a weird, so weird, but it played out the way we were looking for it to play out. If you didn't play it, you're late, and I'm going to wait for this because this is going to come. Whether it comes there or there, I don't know, but I'm ready for this thing to move into this, but starting over back here. That thing can trend for 6 months. Yeah. Costco. Oh, Costco. I told you I like Costco. I'll always like Costco. It's done enough. All I need is the pullback. This thing's ready to go again. Yeah. I thought about Costco on this break on Thursday simply because sometimes when it breaks, it can just like make it hard to get in. Mindful of that. CSX, we'll watch and see. Carvana still looks bullish, right? I think. It's a nice, strong consumer stock. There's the Dow. Fastenal, that's a possibility. GBTC. Bitcoin is back up into this area here. We'll see if it rolls over. Gold bounced off the 50. GM. I think GM has done enough that I would consider it. Yeah. Yeah, I do. Google. Okay. Google, not yet. Not yet. Meta, maybe. Home Depot. Home Depot held the 200, but it's sitting down near its, or it's getting close to earnings. There's the small caps here. JP Morgan. I like JP Morgan. JP Morgan held the best, didn't get anywhere near its 200. If this thing has just a little pullback and holds here, then I'm definitely looking for it to get back up and then possibly start a new trend. Yes. I like that one. Oh, my pen froze. I was worried it was going to, and it did. Son of a gun. I don't know why it does that. KBH. That's a maybe. Coca-Cola waiting for consolidation. Meta. I like Meta on a pullback for sure. Let's go MMC, Bob says. Whoops, that's not it. MMC. Yeah, Marshall McLennan. We looked at these guys. Yeah, that's valid. I mean, you know, you could even, I would say at this point, right there. Right? I could look to get into this thing, put my stop not all the way down, but maybe under these bodies so I could take a little pressure off and try to catch the momentum. I like that one for sure. The volume is iffy. It's about 1.2 million or 1.7 million. You may not have phenomenal options. I don't know. You'd want to take a look. MMM. Let me get back out of these candles here. MMM looking like it could be setting up for another move. We'll look at that one this week. Morgan Stanley, no. You can see how, right, why I flagged JP Morgan relative. JP Morgan didn't even break the 100. This thing's dropped below its 200 and it's struggling to get its head back above it. Microsoft, it's not there yet. Maybe it could have a small pullback. Same with Micron. That's a no. Netflix, I would say yes. I would be willing to trade this on a pullback. I don't think NVIDIA is ready yet. Kind of, but boy, I'll tell you what, if it doesn't get through this resistance here, it feels very head and shouldery. That feels like a 10-gallon hat, head and shoulders. PLTR. Oh, so strong. Just waiting for a pullback now. QQQ. Maybe it's done. We don't know yet. We're not out of the woods just yet. We just think that there's a chance this could be the week. We had some stabilization. We have some setups that look like they could give us higher lows. That's what we have in front of us. TJX still looks okay, I would say. Looks like it could be turning into something there, bouncing off and around the 50. TSM on a pullback. That's the one I like the best. Why? Because of the V. Whoop, whoop. Gave me a V bottom. Boom, boom. Next pullback. Good to go. UUP. Love the dollar staying underneath the 200. The VIX. Yep, we've already seen that. We know what's going on there. Let's go to Walmart. That looks okay. XLB. Oh, that's right. Earnings. You're right. I should have flagged that. They're just a couple of days away, aren't they? A week away. 8:15. That's Wednesday. Yeah, Wednesday. Okay. XLB. XLC. Okay, what do I like about communication services? The fact that with the help of Netflix and Meta, I'm going to try this pen. It broke this consolidation line here. I'm going to draw this one in so we can see it. My other drawing tools have been kind of a pain in the butt. So let me just draw this in real quickly here. Right? This is a good one because you can see it tested this already one time and it failed. If it had held over here back on top of the 50, we would have been trading it, but it didn't. It reset, and now it's doing it again. So now this time, if it pulls back and holds above this consolidation line, that's good to go. One of the reasons why I like that better. Energy staying pretty weak. Financials okay. Industrials okay. Technology not quite yet, but trying. Staples just kind of moving along. Same with utilities, still some defensiveness in those. XLV, I would say kind of choppy. So what are we looking for? We're looking to see if there's a pullback. If the pullback is mild, that's what we're going to trade. Our posture has stabilized. It's stabilized in a still bullish position. This would be very much in line with trading out of a correction. Be aware of volatility still a bit high though, right? If you buy options and the vol's in the 20s and it drops from there, that vol's going to work against you. So that might mean you want to buy deeper in the money. If you're good with spreads, you might do spreads instead. But yeah, you've seen with the volatility, there's some uncertainty around the volatility. So be mindful of that. Real quickly before I wrap up, we are on section 1. In your business plan, this is the executive summary. Who's driving the ship? Strengths and weaknesses. So important for you to have an honest assessment because we need to anchor to our strengths and we need to identify weaknesses that we can then set goals to overcome. Good to see you, Sandy. Have a great week. I'll see you tomorrow. Commitment and discipline. These are all statements and people are like, what do I need that for? What do I need that for? I'll tell you what. I posted... Lee's not here today. He said it was very useful to him. I posted a sample trading plan. It looks like this. Okay, and I've got some. It's ugly, but I always tell people, hey, Michael, good to see you. Michael, I'm going to send you a direct message via Discord. Look for that if you don't mind. I have to flag something with you, so keep an eye out for that. The personal info, strengths and weaknesses. What do I do that I can rely on? What am I going to do to allow me? Is this sample on the intro list? This sample is, let me show you where. In the group downloads. Nope. Trading resources. In the... I put it in trading resources. I guess it's a download, so it should have been in the downloads. Sorry, that's my bad, you guys. If you go to trading resources and you remember with these two, you just need to scroll through them all to make sure you have everything. So in trading resources, make sure you have all the links. Book the link, bookmark it, right? You should have a folder in your bookmarks specifically for our group and all your bookmarks are in there. You can organize bookmarked, in your bookmarks for things like the videos. And then if you come to the very, very, very bottom, sample trading plan. You can download this document right here. And this document has everything. This is my commitment statement. This is my mission statement. I spent some time on this one. My trading mission is to become a consistent, disciplined, well-organized trader who generates yearly profits. You'll notice I went yearly. I don't even want to say quarterly in case it's a nasty quarter and there's nothing I can do about it. These strategies are adaptable, relying on strict risk and money management techniques. My objective is to be flexible. I'm fluid. I'm adaptive to ensure effectiveness in trading despite volatile or changing market conditions. I will be vigilant in using well thought out and defined rule-based systems at all times in order to eliminate emotions from my trading decisions. Make sure I keep the chimp locked in the cage. That's my mission. You can take as you want from that. You can take the whole thing and change a few words. My mission statement is your mission statement. Vision statement Yeah, I just wrote one there. A lot of these are generic, but I used my very specific mission statement for that one because I spent a lot of time writing that way back when, like 15 years ago. I haven't changed it in 15 years, I'll tell you that. How about that? And then that's it, right? So this first page to me is critical, and a lot of people underscore its importance. So I would say give it a chance. Spend some time on it this week. 1 hour. That's what I ask for trading plan specific time. 1 hour. Whether that's 1 full hour, whether that's 2 half-hour periods or 3 20-minute periods. It's up to you, but commit to it. All right, that's it. It's great to see everybody. Tomorrow morning, we will be on our normal schedule. So, and I will tell you this, both Glenn and I are going to bring up the trading plan this week. Section 1, that's what we're all focusing on. Put a little time in now just to get started. Tomorrow we meet 15 minutes before the market opens, and we meet in the evening for our cocktail hour, chit chat, hang out, get to know each other. I think we're going to start seeing where you find trading partners that you can work with during those times. Very, very productive. All right. Thanks, everybody. It's good to see you. Have a great rest of your Sunday. As always, happy trading.